This conference will now be recorded.
Thank you for your interest in our affordable home ownership program. At Set Ranch and Prosperity Club, our mission is to level the playing field for low income and racial minorities so that they may prosper physically, spiritually, and financially. One of the ways we do this is through our affordable home program. So I'm going to start out by giving you an example of a real life loan scenario. And in this case, the person bought a house for $115,000. They paid $10,750 up front. Of that amount, $5,750 went straight to bank fees, points, and private mortgage insurance. So their loan was still $110,000. They got a loan for 30 years and their interest rate is 4.73%. They would have loved to have paid it off in 15 to 20 years. However, they would not be able to afford that high of a monthly payment. In fact, their debt to income ratio was already too high. And even though they had a fair credit score of $680, they had to pay off a lot of credit cards, small amounts, uh, in order to be able to afford the monthly payment. So they paid about $5,000 to do that. Their monthly payment is $847. Of that, $153 goes each year or each payment towards the house, and then interest $398, taxes and insurance, which you'll pay no matter what, whether you have a loan or not, of $224 a month, and then private mortgage insurance of $72 a month. That private mortgage insurance they're going to continue to pay for most of the loan, and they were required to pay this because they didn't have 20% down at the time. So over the life of the loan, they're going to pay about $304,920. With our program, there's no private mortgage insurance payments. There's no points, there's no bank fees. You do not have to repair your credit because no credit is required. And every home is paid off between 15 and 20 years, depending upon what that affordable payment is for you. So you're going to pay about $183,200 over the life of the loan. Of the program. This is a rent then own program. We do require you to make a significant down payment, and you, in a sense, pay interest because part of your payments are going towards rent versus the home. So you might save up to $121,720 in purchasing this home, and then your home would be paid off, and you would be able in 15 to 20 years, and you would be able to then pass on that equity to your children or use it for something else. Now, the way you form the significant down payment, which is $20,000, is by getting a group. And it could be a group of anywhere between 3 to 6 people. However, the ideal group would be uh, five. So the person who first starts out the group, going out to find one more person to join the group, wants to find 4 people that they trust and that also aspire to be homeowners. Then each person would contribute $4,000 a year every year for 5 years. And every year, a group member would get their house. So you would be the one that got your house in 2020. So about 6 to 8 weeks after the $20,000 is paid, your home would be ready. Obviously, you would be able to see your home and know what home you're about to be in before that. And then the next year in 2021, the first person that joined the group after you gets their home, and then so forth. So you're wondering, why do you have to form a group? Well, you form a group because it allows you to pay less money up front, but also get the benefits of a large down payment. So you're paying a $20,000 down payment towards the home. However, you're only paying it $4,000 a year for the next 5 years. This gives you also an affordable monthly payment, so that you can pay the home off in 15 to 20 years versus 30 years and save a lot of money on interest. It also creates peer-to-peer accountability, which allows us to avoid the credit checks, because when you are accountable to someone else, you are more likely to uh, meet your commitment to make your monthly payment and continue on with the program, helping others to achieve their financial goals as well. And also, iron sharpens iron. So you're able to work together to help each other continue to achieve financial prosperity. Of that $20,000 that's paid every year, $1,400 of that, or 7%, goes into a group managed fund. So at the end of the 5 years, there's $7,000 in that fund, possibly more, depending upon what types of member loan agreements that you guys made throughout that time. So after that 5 years is up, you guys can then split what was in that group managed fund. So the way this works is, say a member needs to borrow $500 in order to pay their rent this month. Well, they could get that from the group as long as there was $1,000 still available in there, because you can't take out more than 50% of what's in the fund. Then the group would have to decide whether or not they would give that loan to you, and then also what the payment terms would be. So this helps you avoid paying that high interest payday loans and so forth throughout the year. Jeremiah 29:11 says, "For I know the plans I have for you, declares the Lord, plans to prosper you and not to harm you, plans to give you hope and a future." And we believe that, and we believe that that is part of our purpose, is to help be a tool that God uses for that. So you can follow us on Facebook and Instagram at A Space for Us. That's with the number 4 spelled out. You can also subscribe to our YouTube page. It's A Space for Us, and it has a more detailed video about our affordable home ownership program, and also lots of information out there about building wealth with your tax refund. If you have questions or you are interested in joining the program, please send us a message to email to aspaceforus@yahoo.com. Thank you so much and have an excellent day.